Hello friends, now let us understand what are the accounting terms. So first accounting term is nothing but the revenues. So revenues are nothing but the inflows or the enhancement of the assets of an entity. So revenues are what? Revenues are nothing but the inflows of the company. Inflows means by for example inflows of the company where the cash is going to come in. Now how the cash is going to come in? By selling of products, by selling of products which are manufactured by the company, by selling of either products or many people sell the services also. So by either selling the product or by selling the services, the cash inflows which will come out, so they will result from delivering product, goods, or rendering services or any other activities that will constitute entities major or central operations. So the result which is deriving or producing goods, rendering or other activities that constitute entities major central operations. So basically revenues is related to generating more and more amount of cash inflow by selling of the product, which is the core manufacturing thing. Now we'll look the second term. Second term is nothing but the expenses. Expenses are nothing but the outflows. Outflows, uh, basically there are different kind of outflows. Which are the outflows? Expenses, for example, if you want to manufacture a pen, then what you will require, you need to do expenses on what? The labor. You need to hire the labor for manufacturing, right? Or you, if you purchase some machinery, right, that machinery is going to require some maintenance, so that maintenance expenses are there. Then you will be requiring some marketing, you will be doing some ads in order to sell that product, so this is the marketing expense. You will be giving salary to the managers, so this is nothing but that is another expense. You will be hiring some internet facility, you will be paying some rent to that, so that is expense. If you are doing courier of the product, so that is nothing but the transportation expense. If you are packaging that product, so that is nothing but the packing expense. So these are all expenses, which is required for the product. Now what are the accounting terms? That is gross profit. What is gross profit? Operating expense. Gross profit is nothing but the gross margin. Gross margin is nothing but, it is, gross profit. Gross, as the name suggests, it is gross only. There is difference between gross profit and net profit. Net profit is the final income, but here gross profit income is nothing but, here we don't reduce the interest or taxation. We don't reduce this amount from the gross profit. So this is nothing but what we say, for example, if you have manufactured the pen for rupees 6 and if you are selling it for 10, so this 4 rupees is nothing but the gross profit. But for, if you want to calculate the net profit, that 1 rupees is going for tax and 1 rupees is going for bank interest, then 2 rupees is the net profit per pen. So I am just showing you in order to understand best possible thing. So what are operating profit, and what are other expenses and all that. So these are the accounting terms which we actually use. Now net income or net loss, which I have told you, and there may be profit. For example, if you are manufacturing the pen for rupees 10 and if you are selling for 6 rupees, then there is a 4 rupees loss per pen. So there can be profit or loss. It depends what kind of quality you are manufacturing and what kind of market situation is there, as far as the selling is considered. So my dear friends, there can be net loss also, which can be there. Many of the companies goes in loss, especially of the companies like which are owned by Malia, Kingfisher. This company went in loss, so there can be net loss also. But friends, I would suggest you, if you want to do CA, don't take the balance sheet for the people who go in loss. So let us understand how the income statement works, and how it is, what are the terms here. Here it is nothing but the name of the company. Here the name income statement is written, and for which year ended you are calculating, that year is mentioned over here. Now first is nothing but from where the cash inflow is going to come. Here the cash inflow means from where the amount is generated. Amount is generated by selling of some product by the company. Now what are here, second term is expenses. Expenses means what is you can call it in Hindi kharcha, or you, these are the expenses. Expenses, for example, labors you hired for that product, this much wages you provided. This is the rent for your building or plant where you are using it, and this is for the transportation of the product, this much cost went. Now here the machinery year after year their value is going to reduce, so that is nothing but their depreciation expense. So all these values are going to be getting reduced. So total amount of expenses minus sales, here the income statement is going to get generated. So the 29,300 is nothing but the, so my dear friends, 98,600 minus the 69,300 is the expenses. Here the revenue generated from sales minus expenses will give you net income, that is 29,300 rupees. Understood? So this is nothing but the income statement. Now we'll have trading account in the next slide to come.